Hey guys, welcome back to my weekly options game plan. If you're new to my channel, I post my option trading game plan every Sunday where I share with you the trading opportunities for the upcoming week. So as usual, let's start off with a quick recap of the trading opportunities I mentioned in my last video. So starting off with the S&P 500 chart, if you look at the chart, it is actually quite an exciting week for the market this week. So on Tuesday, we had the retail sales number and it was not as good as expected. That's on the 15th of June. And on Wednesday, where the market actually opened slightly lower and it closed significantly lower, landing on the 20-day moving average, which is the line in pink over here. And on Thursday, we had the FOMC meeting. So the market was still pretty undecided at the close of Thursday. But on Friday, you can see that the stock market actually gapped down quite significantly. And by the time it closed on Friday, prices were way down from where it opened. So right now, as of Friday's close, prices are sitting very nicely on the blue line, which is the 50-day moving average. So for me personally, I do feel that this is actually quite a healthy correction, and it's a correction that has been is much needed, I would say. So because prices have been going up for the longest time already, and it's more or less time for the market to correct so that there are new buying opportunities. So for me personally, I do feel that there might be more room for further correction in the upcoming week. Later on, when we take a look at the weekly candlestick chart, you realize that this $405, $404 price level is actually going to be quite a significant support level on the weekly candlestick chart. And this so happens also to be the 100-day moving average for the daily candlestick chart. So I wouldn't be surprised if we see a slightly more deeper correction in the market next week, probably around to the this yellow line that we see over here. So if you take a look at the weekly candlestick chart, so the 405 price level is actually just sitting nicely on the 20-day moving average of the weekly candlestick chart. So as you can see right now, we are still actually pretty far away from the moving averages for the weekly candlestick chart. So I honestly won't be surprised if we see a much deeper correction next week. In later on when I talk about my portfolio, I'll be sharing with you guys some of the changes I made to my portfolio this week in anticipation of the deeper correction that I expect next week. So, but the interesting thing is if you look at the chart of the Nasdaq, so this week I would say that the tech stocks actually held up pretty well, especially if you look at some of the major tech companies like Amazon, Google, Microsoft, and Apple. They actually didn't correct as much, or they actually found the prices were actually quite supported pretty well. So they didn't see that major correction that we see in other sectors like the banks, the airlines, and some of the consumer discretionary. So we might see actually a rotation back into the tech stocks again. So moving forward, that might be something that we might want to consider. So stay away from some of the more airlines and bank stocks, and maybe start looking at some of the tech stocks. So, but we shall see what happens next week. Coming over back to my Excel spreadsheet. So I actually did quite a number of changes to my portfolio this week. I will start off with the entry on Oracle. So as you recall, last week I mentioned that I need to close the Oracle position. So this is actually a double calendar spread, and this is purely an earnings gameplay. Oracle is releasing their earnings on the 15th of June. And I did mention last week that there's a very high possibility that I will end up closing this particular position after the earnings are released, simply because the volatility for Oracle was actually a bit out of whack. If you take a look at the charts of Oracle, they were quite volatile over the last 2 weeks, and that sort of spiked the front month volatility a bit, and that caused the trade to lose quite a bit of money. So I actually closed the trade after the earnings. I closed it on the 16th of June. So that's after their earnings on the 15th of June, and I closed it for a loss of $600. So pretty much expected because of the volatility spike in Oracle. So moving on to the other cash secured puts that I mentioned last week. So as I mentioned, I had two cash secured puts, one on Alibaba and Apple, and actually expired worthless. For both of them, they actually expired significantly higher than the strike price that I bought them at. So I got to keep the entire premium for Alibaba and Apple. And moving forward, since I do expect some volatility in the other stocks like the banks and some of the consumer discretionary stocks, I wouldn't mind selling some cash secure puts, especially for my long-term portfolio. I'll be talking about them in the later part of this video when I talk about the opportunities for next week. And moving on to my diagonal spreads, the one for Pfizer. So if you recall, 2 weeks ago, the price of Pfizer actually spiked up quite significantly, and my short call was actually deep in the money. So I ended up closing my short call for a loss on the 10th of June, a loss of $520. And after that, if you look at the price of Pfizer in the charts, Pfizer actually came back down again. So on Monday, I actually decided to sell back my short call. This time round, the contract is expiring on the 25th of June, strike price of 40.45. So this is not my position for Pfizer is now back to a diagonal spread position. But right now, the profit and loss for this diagonal position is actually a loss of $528 because of the short call position that I closed early. But no regrets on this one because 2 weeks ago the prices of Pfizer actually shot up quite significantly. I had the impression that it was going to continue going up, but that didn't happen and prices corrected back. So I decided to sell back the short call position, and the diagonal spread is back to and the position is back to a diagonal spread now. And moving on to Starbucks. So if you recall in last week's video, I actually talked about Starbucks as well. So for Starbucks, I actually decided to close the position early. So I entered the position on the 10th of June. And on the 15th of June, when the results for the retail sales number came out, I didn't really have a good feeling about this because the numbers was not as good as expected. And I sort of have a feeling that there will be a correction somehow or somewhere in this week. And I just decided to close this particular Starbucks position early. And it turns out to be slightly a good choice, I would say. If you look at the prices for Starbucks on Friday, seems like it has come down quite a bit. So I'm out of my Starbucks position. It's actually quite a quick entry and exit. I entered on the 10th of June, exited on the 15th of June, including commissions. I made a total of $107 for this trade. So likely for now, I will stay out of any this consumer discretionary trades, especially for diagonal spreads. I'll start to look at some of the tech stocks going forward. So if you recall in last week's video, the other diagonal spread position I had was the diagonal spread position for CMCSA. So my short call contract actually expired on the 18th of June. So now this contract has actually expired worthless because the strike price is at 58, and as of Friday's close, the price of CMCSA is at $56. So this short call actually expired worthless, but I forgot to roll my short call. So right now my diagonal spread is actually just a long call position. So likely when the market opens on Monday, I will likely enter a short call for CMCSA to make it back to a diagonal spread. So moving on to the last in the list, that will be the bull call spread for the VIX. So if you recall, over the last couple of weeks, I did mention that I'm looking to enter the bull call spread for the VIX as a way to hedge my portfolio because I feel that the market is actually due for a correction. So I actually entered a total of 24 contracts on the 16th of June. So my contracts are expiring on the 15th of September. So typically for bull call spread on the VIX, I typically enter contracts that are at least 2 to 3 months out, so that it gives the trade time to actually play out. So the thing that I really like about the bull call spread is that it has a very good risk to reward ratio. So if you compare it to other trades, like for example the diagonal spread is actually very capital intensive, and you really need to monitor for the diagonal spread. But for the bull call spread, it actually has a very good risk to reward ratio. So you can see that as of Friday's close, on Friday the VIX actually spiked up quite significantly to 20.7, and just based on this alone, my profit as of Friday's close is currently at $590, and my capital, the capital that Thinkorswim actually blocked me for was 1,500. So it's almost close to more than 30% return within a short span of 3 to 4 days. So a very good risk to reward ratio. And you also would have realized that for VIX, they go up very quickly and they also come down very quickly. So my expectation for the VIX or for this particular trade next week is I will likely take two-thirds of the contracts off the table. So I'll likely close 16 contracts on Monday or Tuesday when we see another spike in the round, another round of spike in the VIX. I will likely take 16 contracts off the table and just leave the remaining 8 for the contract to run. So this is very similar to my approach that I did, I think a couple of months back. I also entered the bull call spread on the VIX. I take two-thirds of the contracts off the table and let the remaining contracts run, just to take the profit off the table for a bit. So because the VIX actually goes, like what I mentioned earlier, the VIX actually goes up very fast and it also comes down very fast. So for this kind of trade, it's best to actually lock in the profit whenever you can. So if you take a look at the charts of the VIX, let's look at here. You can see that on Friday, the VIX actually spiked up to 20.7. So my expectation for next week is that likely prices are likely the VIX is going to hit around this 23 price level, hopefully. And when that happens, I will quickly close my trade 16 of my 24 contracts of the VIX, and I will let the remaining 8 contracts run because I still have a lot of time, 2 to 3 months out. So if I manage to close at this 23 price level, it's likely going to be a very good risk to payout or return on investment, simply because I've only been in the trade for the last couple of days. So we shall see what happens next week. So that's all for the quick recap of this week. Let's move on to the opportunities for next week. So moving on to the trading opportunities for next week. In today's video, I'll be sharing with you 4 trading opportunities. So the first one is actually for the Taiwan Semiconductor, ticker symbol TSM. So this opportunity, I actually mentioned about it last week as well. So if you recall, in last week's video, I did mention that I was hoping on Monday, when the when the market opens on Monday, the price of TSM will actually retrace back slightly and I can enter a diagonal spread for this. But unfortunately on Monday, which is this green candlestick that you see over here, prices shot up significantly and I didn't have a chance to actually enter a diagonal spread position for this. But right now, as of Friday's close, you can see that prices are back down again on the green line, which is the 150-day moving average. So hopefully the price will hold for TSM on this green support line over here. But if prices continue to break further down, I likely won't enter any position. So we shall see what happens over the next couple of days for TSM. If prices continue to hover around the green support line, I will likely enter a diagonal spread position for this. But seems like some of the semiconductor stocks like TSM, AMAT, they were all affected by the correction on Friday. So we shall see what happens next week. If the support level is actually broken, I will actually not enter any trades for TSM. So moving on to the second opportunity, that will be for Cleveland Cliffs, ticker symbol CLF. So this is actually a mining company. So you can see from the charts that right now prices actually corrected quite closely to the 50-day moving average. So this has been quite a strong support level for the stock over the last couple of months. So there could be a possibility based on what is going on in the stock market for the other stocks, that there could be a deeper retracement to the yellow line, which is the 100-day moving average. So if prices hover around the 50-day moving average, which is the line in blue, over the next couple of days, I might also consider entering a diagonal spread position for this. But I think this is also very deterministic on how the general market moves over the next couple of days as well. So this stock is actually on my radar for next week. I'll be monitoring this closely. If there's an opportunity, I will likely enter a diagonal spread position for this as well. And moving on to the third in the list, that will be for the stock of Twitter. So as I mentioned earlier, right now seems like the tech stocks seems to be holding up pretty well despite the correction on Friday. Some of the major tech companies like Microsoft, Apple, Google, Amazon, all has gone up significantly. So Twitter is the only one that hasn't move up too far. So right now prices are sitting around all the moving averages. We have the blue line, which is the 50-day moving average. We have also the pink line, which is the 20-day moving average, and also it's close to the green line, which is the 150-day moving average. So if prices hover around this range for the next couple of days, I wouldn't mind taking a position, a diagonal spread position for Twitter, just hopefully that I can take part in some of the upside as well. So, but we shall see what happens next week for Twitter. So moving on to the last in the list, that will be for the company 3M, ticker symbol MMM. So this is actually for my long-term investment portfolio. So for 3M, you can actually see from the chart that it has actually corrected quite significantly over this week. It is down more than 5% within just a short span of 5 days. From around $200 now, it's sitting at 190 on the yellow line, which is the 100-day moving average. So one of the key support level for our MMM. So for cash secured puts, I only sell cash secured puts on company that I intend to hold and invest for the long term, and I wouldn't mind getting assigned shares for MMM at this kind of price level. But I shall see what happens over the next couple of days first. So maybe if prices correct even further, close to the green line, which is the 150-day moving average, I will start selling cash secured puts immediately. I will not wait for any bullish indicator, simply because at this kind of price level, I actually don't mind getting assigned shares for MMM. And if you look at how the chart has been going, it's a very steep correction, so which means that the volatility for MMM actually spiked up quite significantly. So if I start selling cash secured puts on MMM, it's likely I likely will get to collect quite a hefty premium for that. So I really don't mind selling cash secured puts, but I shall wait for a couple of days. If it hovers around the yellow line, which is the 100-day moving average, I might consider selling. And if corrects very steeply over maybe Monday or Tuesday, I will definitely start selling cash secured puts immediately. So this is very similar to the opportunity that I mentioned about in last week's video when I talked about GNJ. So let's quickly move on to the chart of GNJ. If you recall, I also mentioned that this yellow line is likely going to provide some support level for GNJ. So unfortunately, prices actually break below this yellow line, which is 100-day moving average. So likely on Monday or Tuesday, when it hovers around close to the 150-day moving average, I will actually start selling cash secured puts, simply because I feel that at this kind of price level, I wouldn't mind getting assigned shares for JNJ. So that's pretty much my trading plan for next week. I hope you have found this video useful. If you have any questions or suggestions, feel free to leave them in the comment section below, and I'll try my best to answer them. If you're new to my channel and enjoyed watching this video, be sure to subscribe, as I post videos like this every Sunday and sometimes on Thursdays as well. Happy trading, and thanks for watching.